People just love to, including us, we try to bucket things in a way that you can label or put themes around things. The reality is, earn just all comes down to incentives. So the Web3 market has introduced tokens as an incentive mechanism. So instead of, and let's take the biggest Web2 apps like Lyft or Uber, the incentive was you got a very VC subsidized ride. And so, wow, this is a really cheap ride. So let me adopt this app. And then Web3, the way they've done that is by introducing this idea of a token. And so tokens are basically become this very interesting customer acquisition tool. What no one has figured out yet is how do you use tokens not only to acquire, but to retain customers over a long period of time. And that is an area around token design that needs to get worked out.
This episode is brought to you by Momento NFT. Momento NFT is a direct-to-fan social NFT app that allows fans to own viral moments from their favorite creators and unlock perks like meet and greets, autographed merchandise, and more. As a creator, you can easily create valuable images and video NFTs of your best social content. And as a fan, you can own viral moments from your favorite creators and unlock perks like meet and greets. Momento NFT is backed by Animoca brand Denza and Mark Pincus. Check out the app available on App Store and Google Play. To start off the show, do you guys want to talk a little bit more about like how you joined M13, how you get into venture? So Latif, you worked at Virgin Group, and then what was it like working with Sir Richard Branson?
So let me start with Virgin. So I spent 8 years at Virgin Group. I was investing in the US, looking at everything from our big Virgin incubated companies like Virgin Galactic and Virgin Orbit to starting a venture strategy where we invested in like 30 consumer technology companies like blockchain, TransferWise, now known as Wise, and Ring, Slack, and the list goes on. So pretty healthy portfolio. I would say the biggest thing I learned working for Richard was just like an incredibly optimistic view of the world. And a willingness to just kind of make things happen. And I think to be a successful investor in venture capital, you have to be optimistic. You have to kind of ask the question, what if this goes right? What could it look like? And so I think working for Richard was actually very helpful for me as I looked into becoming a full-time venture capitalist. And I made the jump, and really after 8 years, it was time to kind of expand out, and joined Carter and Courtney, Carl, and the whole team here at M13 in the beginning of 19, based on the view of how a venture capital firm could evolve to be much more supportive of our founders, but also an investment thesis around enabling technologies, including Web3, that I was very much bought into.
Okay, so I think that's really interesting. I'm just curious, like, what made you decide when 13? M13 is like the fund that to join. Both of you. I know you guys are like really famous for consumer now. Assuming when you guys joined, it was like just starting or like not starting super long. Like, what attracted you to this fund?
Well, the firm had been established like 2016, and Carter and Courtney had invested in D2C brands. One of the investments they made was in a company called Ring, which was later bought by Amazon, the home security business. And it's a company that I was on the board of during the Series B. So I got to know them in many ways through that founder, Jamie Siminoff, and that investment. And what attracted me, I think, to join was incredibly ambitious founders who really wanted to build like truly like a generational kind of venture capital firm, and then the opportunity to help build it and help shape it. We had having very complementary skill sets, and the opportunity to come in and shape everything from first principles. Like, none of us were trained VCs, and so in the classic sense that we worked at like some big VC shops, so we asked ourselves, how should we run investment committee? How should we think about our themes? How should we think about portfolio construction? Like, we got to kind of look at things with very fresh eyes, and that was exciting to be able to really be a big part of building the foundation of the firm. That's really the reason why I joined.
Yeah, that's really cool. I was surprised that you said like none of you guys come from like the traditional investing background, just because I feel like the firm have invested in so many interesting companies like Harvest or like just recently you guys invested in Creator Now, which is one of your favorite portfolios. And then I'm just curious, like, Mark, you joined also really early on. Like, how do you feel like M13 have built up like the unfair advantage per se in like the LA venture ecosystem, like after, the fund was started?
Yeah, so for context, I joined back in 2018 as I finished up school at UCLA, just down the road from here. And at the time, I was looking to get into the LA tech and venture scene, which was a bit smaller than it is today, and was interested in the venture world. And coming out of the undergraduate scene, it's pretty difficult to find jobs in venture. You either got to go to a massive established fund that hires dozens of people a year, or basically join a brand new one. And so I was fortunate enough to meet up with Carter and Courtney Ream, the founders, and came on part-time and then came on full-time, initially helping them just kind of build out the firm and then start fundraising and eventually getting into the fun part of the job of, investing in companies. And, they had a very interesting way of looking at the world, right? They'd been in LA for a while, had been a part of some great young early stage consumer brands. And that was kind of, the mid 2010s, that point in time when like the consumer tech trend was really starting to pop up, and they had good access to it. And so just thought that their frame of mind was a lot different from the rest of the tech and venture world, right? As Latif said, it was sort of first time VCs, right? Which I actually think gives you a good perspective on what's different. And so I thought that they just had a super interesting worldview, and the chance to focus on, consumer tech stuff that I find personally interesting in LA was a great opportunity, and one that was hard to pass up. And they gave me the chance to really hit the ground running.
I was wondering, so when you guys like started like investing in Web3, since Web3 is such a new, very like up and coming emerging sector, like how do you guys like stumble upon this whole sector, as well as like what is your outlook for the future? Since like right now we're not in the best shape of like the crypto economy right now. So curious, like what's your guys' thought on like the future of like Web3?
Well, do you want to start, Latif, with what we did? Because you did our first Web3 deal.
Sure. Yeah, so I would just say we didn't necessarily stumble on it because, we were pretty purposeful in like our view that this was an interesting, while early, very interesting market and a big idea in terms of this real kind of paradigm shift in computing in terms of crypto or Web3, whatever you want to call it. But the first deal we did was when I first joined the firm in 2019. We participated in Lightning Labs' Series A. Lightning Labs is the layer 2 above the Bitcoin protocol that makes it faster and cheaper to use for transactions and remittance and a whole ton of other use cases. And I'd say that not a whole lot of people were investing in layer 2 blockchains in the middle of the bear market in 2018. And I have to say, if you were paying attention to the market then, it was very different than it is today, where 2019, 18, 19, there was significant existential risk on like, is this thing real? Is it going to be around? Well, still, there's a lot of naysayers and doubters, but I think the idea is Web3 market going to be around? That question is not asked. That question now is, well, when is it going to come back? How big are the applications going to be, et cetera, et cetera. So there's been a real sort of paradigm shift in the way people view the market. And I think, you've seen tremendous level of talent move in. Bear market, bull market, I don't see that really changing. You've seen tremendous institutional money come into the market. In 2018, you could count on probably one hand how many venture capital firms are focused on this market. Now there's, dozens, or at least a dozen you could probably list off very, very quickly, that are really world-class at what they do. So that has shifted. And thirdly, there's applications. We've had the first real consumer use case. Let's put DeFi aside for a second, but the first real consumer use case in NFTs was very, very nascent. Still in less sub 10 million, call it, of NFT holders globally. So we think that there's tremendous growth in the NFT market and just generally the application layer that will come about once the infrastructure continues to be built in a way that will allow for more consumers to be onboarded into the market.
For sure. So what does layer two means? So like you mentioned, like one part is like about like, you know, the faster, like the speed aspect, as well as like, you know, there's like app to be built up on this layer. So like why this particular company? And then in terms of like the business outlook, like why it is like really important to invest in these kind of like layer two infrastructures.
So I can start with the example of why the Lightning Network matters. So first and foremost, partially by design, but the Bitcoin blockchain is very slow, which is, I guess, one of its traits, right? But the Lightning Network basically is a set of payment channels, right, that sit above the base layer where you can send and receive Bitcoin significantly faster, significantly cheaper, right? And so for the use case of just buying and hodling your BTC, that isn't that important, but for more real world use cases of sending funds from one person to the next, or between merchants, or between merchant and consumer in the same region or cross border, right? That matters, being able to do that quickly and cheaply in a way that is, you know, more affordable than typical cross border payment channels, right? And so there is an economic advantage and value prop to being able to do that fast and at scale. And now we're starting to see the Lightning Network roll out the use case of being able to send other non-BTC assets through the Lightning Network, which is pretty interesting, and a very, like, almost another can of worms of use cases becomes possible with that. And so I think that that's a super powerful use case, or those are super powerful use cases for the Bitcoin ecosystem. We're starting to see more and more layer twos being built on other EVM, like Ethereum and EVM compatible chains, right? Helping scale applications built on top of the Ethereum, atop of Ethereum and other EVM compatible networks, right? Like that's super important. Something we talk a lot about is how do you make crypto and Web3 apps actually easy for people to use, and having things that are fast and affordable is like a very major part of that. So it's, you know, something that we spent some time thinking about.
How do you guys know if this particular network is gonna win compared to like other stuff?
We don't know.
Love the answer.
We don't know, and we don't view the world as we view the world as sort of multi-chain, including, you know, we've invested around the Ethereum ecosystem, clearly the Bitcoin ecosystem. We're very bullish on the Solana ecosystem, and so we I think we are purposefully making investments across multiple ecosystems because we have thematic views on some of these, and there's trade-offs. So Bitcoin is clearly the most secure one. It's been around since over a decade. It's never been hacked. Solana is much faster and more performant than any other one, but has had its issues going down as a network. Ethereum is sort of somewhere in the middle. Maybe this big transition now to proof of stake. So they all have their trade-offs, and we think they're all very interesting. And so at this stage, we are kind of placing multiple investments and staying close to the developers and the applications that are.
Totally. What are some like factors that when you guys are like looking at these deals, like what are some factors that you think are like crucial for a company to succeed in the crypto space or like the Web3 space in general, as well as like what is like your overall outlook or like thinking framework on like what kind of deal that you would look closely to, and then what are not. I read the article both of you guys wrote together. One of them is about like, you know, just like the essentially like just like earning aspect. Do you guys want to like maybe start from there? Like, you know, what are some couple sectors that you guys are like the most passionate about? Like the earning aspect, you guys made like, you know, 3 section on the bats. Like one is like there's like a essentially like run to earn, and then there is you know, like spend to earn. So like basically, do you guys want to like, you know, talk about those like interesting things that you see in the space, as well as like.
I think the first thing we look at or ask ourselves is, does this need to be powered by crypto? Something we talk about a lot is the fact that 95 or higher % of businesses in the Web2 world are probably fine as is, right? And so that is something that we like to first just, that's a question we like to raise, right? And if that passes the bar and the answer is this should have some crypto element to it, then there are a few different things that we'll look at, right? If it's a pre-launch network or pre-launch application, right, there are fewer data points you can look at. It's more around the quality of the team and the vision and the market and all that. Many of the same questions that you ask yourself when looking at a typical startup. If it is a post-launch business or network, the beauty of crypto is that much of this data lives on chain. And so you can see a lot of the real-time data, which is exciting. And I think one of the benefits of this space, although it's still really difficult to make sense of that and to visualize that data and to access it, but it's possible and getting easier. So I think those are how we think about what signals to look for, right? In terms of, what are spaces that excite us, and what spaces could use tokens or NFTs or any sort of crypto technology. We're definitely both big fans of the NFT wave that's come over the last 18 months. We talk about how that's very much a tip of the iceberg type use case and an application for crypto. Digital collectibles and arts is sort of what I'm referring to. And we're starting to see a bunch of other categories starting to adopt crypto, right? The gaming space has obviously been a big adopter over the past year or so. We're starting to get excited about applications in the commerce space, and brands and merchants think about Web2 brands and merchants think about how they can implement Web3 or crypto into their workflow. Still very, very early. We talk about how physical world-based businesses can think about using crypto in Web3. What else?
Yeah, so I would just say on the earn, your specific comment or question on earn, again, people just love to, including us, we try to bucket things in a way that you can label or put themes around things. The reality is earn just all comes down to incentives. So the Web3 market has introduced tokens as an incentive mechanism. So instead of, let's take the biggest Web2 apps like Lyft or Uber, the incentive was you got a very VC subsidized ride, and so wow, this is a really cheap ride. So let me adopt this app. And then Web3, the way they've done that is by introducing this idea of a token, and so tokens are basically become this very interesting customer acquisition tool. What no one has figured out yet is how do you use tokens not only to acquire but to kind of retain customers over a long period of time. And that is an area around token design that needs to get worked out. And we are very interested in talking to teams that are thinking about unique token designs. There's this idea of a governance token versus a utility token. And a governance token is a token that the investors in the team have, and utility token is the one in the game. Well, does there need to be two tokens? Should it only be one token? Or maybe it's a different way of unlocking one versus the other. So we are intrigued. No one has got the answers yet, at least that we've seen. We're intrigued to continue to invest in really novel teams that are looking at this as a way, because it is our belief that ultimately when the Web3 market recovers alongside the broader macro market, we'll go from 5 or 10 million NFT holders to hundreds of millions. And through that process, what I think we'll see is that these networks will be built and people will figure out the token design, and the next household brands, the Airbnbs and the Ubers and the Lyfts will come out of this market. And so with the work we're doing now is to best position ourselves and invest in teams so that as we continue to learn and continue to evolve our thesis, we will be at the front row of how this market unfolds and hopefully be in some of those great companies of the future.
Totally. I was going to ask for like the current startups I've seen, like all the startups you've seen, you invested in, which ones that are like you feel like have a really interesting tokenomics or any kind of incentives or any kind of interesting points that will help them kind of like stand out among the crowd. And then like right now, a lot of people were talking about, oh, you need to have utility in NFTs and blah, blah, blah. Like if like an influencer or a creator launching a token, what do you think this token should do to help it maintain its value?
Yeah, so on your first question, do we have any portfolio companies that have designed tokens in a way that's very novel? I'm not sure that anyone is, including our companies, have really figured it out. I think they would all be kind of honest about that. I would say that probably a company I would highlight that is a really interesting model is a company called Flipside, which is doing analytics for blockchains and for layer twos, and effectively it is helping these clients of theirs, including ones like Solana and others, that helps them acquire customers. So their customers are analysts or prosumers, and those analysts come into these markets, and then they build really interesting analytics and projects in these markets, and that's really, really important to those ecosystems, to their development. They're not necessarily creating a whole new kind of flip side token design, but they're incentivizing people through these partnerships, and these customers are getting the native token of their clients. So they're, people that are in the Solana ecosystem are getting the Solana token, and by doing that, because as Mark said, it's all on chain, you can see if they're retaining them, because if the token is not moving to another address, it's not moving to a centralized exchange, you can see that the analyst is valuing the token, and there's like a really interesting acquisition and retention model through a company like Upside. So we think that's really interesting.
On the creator end, it seems like you guys are also bullish on the creator economy. So I'm curious, if a creator launching a token or like an influencer launching a token, what should this token do like to maintain the utility as well as like maintain like the value of the token?
Actual use cases for the token. I think that in the creator space, a token would be used, like in my mind, as a way to form better bonds with your fans, right? And so by being a holder of that, you get access to certain perks or features, right? Whether those are physical goods or access to digital goods or events, right? I think that is a pretty strong mechanism for just building a better bond with your sort of, generally speaking, like top 10 or top 1% of fans, right? More so than your mainstream audience. In terms of how the token would be designed, right? I mean, I think that's a longer conversation of many details around like tokenomics and token design, right? And I don't think that there is anything quite yet that's cracked that nut, right? But certainly a space that like creators and many businesses are thinking about very, very deeply.
I just add like the principle that a native token of a creator can be used to provide loyalty and access. There's this concept of token gated communities. Like that feels very much like a great use case of a token. And so, yeah, that's why we've invested in companies like CreatorDAO. That's why we continue to spend time in the creator economy, because there needs to be a better way of aligning a creator with their best fans and giving them an opportunity to be rewarded for their patronage. And that's why we think the token is this like monetary and utility-based sort of currency to manage networks is really interesting. And so we'll continue to spend time there.
I'm just curious, like, if people are not really driven by the financial upside, or especially for the creator space, let's say like I don't really care if 5 years later I can sell Mr. Beast's coin and then like to get the financial return, I'm just like there for like the entertainment value. So if people are not driven by the economic or ownership side, like how do you think like blockchain or crypto can kind of like power this new generation of economy? And in the beginning, you guys kind of mentioned one aspect is like one of the things that you guys look for is like primarily, can blockchain or crypto or Web3 technology change how this thing is functioning now? Like, what are some kind of like specific zone that you feel like could be like, totally changed by the blockchain or like Web3?
Well, I don't think it has to be financial. Like NFTs are, as an example, are not only, can they have potential financial value if you want to resell it, but the idea that a creator will always get paid through the smart contract or through the code, that there's like a very important element to that. And we're at a company called Nori that actually does not use NFTs as a way of any kind of financial gain, but uses NFTs as a way of verifying that very different business in the creator economy, but verifying that a ton of carbon has been removed from the atmosphere. And the proof of that is that the buyer has an NFT that actually validates where exactly down to the farm level in Nebraska where that is. And so I don't think it needs to be completely kind of financialized. Also, the reason why you may not care about the financial aspects of the Taylor Swift token one day, but you want the token because that token gives you access to things.
Mhm.
And so if the only way to get the access is through a token, then the token has real value in that it provides access and utility to you as a fan. And then thirdly, I would say you might not value it, but somebody out there, and Taylor Swift, I find examples of big artists, Harry Styles or Taylor Swift, just honestly probably not like the greatest, because to me it's about the long tail of like smaller artists. And if you are a electronic musician and the only way you can make money is by, and you have a family and the only way you can make money is by touring the world, that's not really great for your lifestyle. And so the idea you could issue a song and sell it as an NFT for thousands of dollars, and then you give away the song for everyone else to listen to, it's actually very interesting because there are patrons that will want to own it because they just love that artist. And so the question is, that's how I think it's interesting from a financial standpoint, because you can reward some fan who really does value it, and that allows the artist to have a lot more creativity in how they spend their days.
So since you guys are like a consumer driven fund, what do you think like Web3 can change how people interact with consumers? Let's say like if let's say I have a Shopify store, like how could I incorporate crypto or Web3 into my life? Actually, one of the deeper questions, like right now there's a lot of, let's say like UPS has a metaverse now, like Walmart is in the metaverse, like all these like consumer brands started migrating onto the metaverse. I'm just curious, like number one is like what should be like the future of e-commerce, and then as well as like there's no like solution or like no really substantial use case we've seen yet that's like applied into like a day-to-day individual. Let's say if you own like a Shopify store, like how would you kind of like implement the Web3 strategy into your game? Besides like Shopify allow crypto to like pay. I think that's it.
To the use case of big brands creating their own metaverses, that feels by and large pretty unauthentic, and most likely it's just some dollars that come from a big brand's like brand marketing line item in their P&L, and as a way of them just exploring. I don't foresee that being like, for the most part, a big driver of use cases moving forward. I think to the other question of how could I as a Shopify store owner implement crypto or Web3 into my business, I think first off, you don't have to, right? There are plenty of Shopify merchants and e-com merchants that are totally fine as is, right? I'd say the majority. But there are ways to incorporate it around your loyalty, your membership program, right? And some of the rationale may, I think, in part, the rationale to adopt crypto into your tech stack, to a large part, I think could be attributed to the cost, right? Like it can be cheaper than typical member loyalty programs to implement a Web3 one, right? Like it impacts your bottom line. So there's that. And then there are broader questions of like, do I need a metaverse and things like that? Probably not, right? Although some brands that might be more natural, I think. But I would say cost is a good use case.
And loyalty, right? Like
Starbucks,
exactly.
Yeah, exactly. So yeah, for brands implementing it for their loyalty or rewards programs, right? Brands are constantly spending millions of dollars per year on how to optimize their loyalty reward programs. Starbucks just announced that they're implementing NFTs and working with Polygon. That still remains to be seen of how they do that, and the language is still pretty high level, but it's a positive step in the right direction to see a company of that caliber taking it seriously and actually putting that out into the public.
For sure. I'm curious, like, what do you see as like the most authentic brands entering the metaverse? So like we've seen literally every brand is on like having some sort of crypto play now. Like, I think like good ones are like, Nike or Gucci. Gucci has been like making really small bets, for example, launching Gucci Garden or like collaborating with many different artists. For example, Nike is like making like one big bet, which is like acquiring artifact and like doing these like shoes drops. And then like, but like when you're seeing like there's just so many brands that's just buying virtual location on the metaverse, like I'm curious, like what are some interesting ways besides like I guess like incorporating the crypto payment aspect or like, like payment loyalty programs with crypto? Like what are some other ways of the crypto area? Like what are some other ways they could like enter Web3 or like, let's say 10 years from now, like what do you think, how will shop?
Some big questions you've got there. I mean, I like from an investment thesis standpoint, we don't spend a ton of time thinking about Web2 brands entering crypto because it just feels like very backwards looking. And so we are interested in digitally native Web3 brands that come up. And that's why seeing the rise of Bored Apes and CryptoPunks are very interesting. I would just say we're more focused on the evolution of native Web3 brands as a way of, and I think the idea that you've got Bored Ape holders that now own that IP and are able to go, create physical restaurants and stores around the IP they own. That's like really, really cool. Nike, like some brands are just more forward thinking or are just more badass brands. So like they can pull it off like a Nike. I don't think it's going to be for for everybody. And this doesn't feel like an area that as species we spend a lot of time because it's sort of very backwards.
When you were thinking about like Web3 native brands, what are some brands that you can like think of? I think you mentioned a good one, let's say like Bored Ape. So like we've seen like one of the giant brand building strategy is like launching a particular like NFT or like having built the IP first and then kind of sell the IP, partner them up with like different utility functions. We can see like WeFriends, like, launching these toys collection in Macy's and stuff like that. So I'm curious, like how, like what are some interesting Web3 native brands?
Well, we have a great company called Stepn, which you may or may not know, which is to me like what is a brand? A brand is something that has awareness and has a community built around it. And so Stepn is a Web3 fitness application that incentivizes people to get healthy through the initially unlocked through buying of NFTs, and it's built a very vibrant community. Now it's had its ups and downs, but I think the fact that it's had, I think roughly about 5 million cumulative users, it's had 1 million MAUs, 4 million MAUs, 1 million DAUs. These are significant numbers, not related to Web2, but certainly to Web3. And the thing that is exciting about some network or a company like Stepn is that they are really trying to push the envelope on creating everything from an NFT marketplace to a very, very vibrant application that's got worldwide usage to physical distribution. They were very early to partnering with ASICs, and they've looked at a variety of different ways to really try to like cross the chasm and become a very, very large brand. But at the essence of it, they are a Web3 business. They are governed by their token network. And that's really important. So I think to me the native Web3 brands are just like big networks that have a lot of users, and we'll continue to look for more Stepns.
And just to add to that, I think there's a traditional view of what a brand is, usually something that sells a consumer product, right? And some of the early quote brands to emerge in Web3 have been NFT projects, right? Because it's the digital good, but sort of familiar to what like our typical definition of a brand is. But I think even in other areas of crypto, right? Like take Uniswap, for instance, right? Most people don't have any brand affinity for their traditional bank or financial services provider, right? But people love Uniswap, right? In DeFi, right? Like you don't see that level of affinity for a financial services product, but you do see that in crypto. Another example is ENS. No one cares about any domain name service provider, but all of a sudden ENS is a massive name in crypto and one of the key infrastructure providers and key players in helping you manage your identity in Web3, right? And so we're seeing more like the definition of brand, I think, has expanded a lot in crypto, which is exciting.
For sure. In terms of like, for example, when you mention like Stepn, the core function is like kind of really similar to Strava. So like, like there was like a running app that kind of like have a community of people where you can like kind of work out with people. So if like NFT or like token gated is like the only kind of like differentiation? Like, what do you feel like that will be sustainable for the future? Or like, this is just like a new way to attract people, like a marketing strategy. Let's say, let's attract people with the NFT and then like group them, like, like make them stay by just like creating a community. My question is like, what is like the key difference between these type of organizations compared to, let's say, the Web2 version of them?
So the example of Strava versus Stepn, I don't want to exaggerate, but I honestly think Strava might be the favorite app on my phone. I absolutely love that app in business, but it's a different use case than Stepn. Strava is focused on a smaller set of users, right? Usually like higher intent people wanting to run or cycle. Whereas what's been interesting to see about Stepn is a massive percent of their users are people who don't exercise on a regular basis, right? And you can go and see some of the posts that people put on Reddit and Discord, and it's been pretty phenomenal to see how it's been able to get people to exercise and get outside, right? And in a way that feels like a game, right? And so it's been cool to see them expand to that type of expand to a broader user base than something like Strava ever would.
That's really interesting. I'm definitely gonna try it out. What do you guys think about, like, let's say the current like M13 portfolio equivalent? Let's say like, the daily harvest of the world. Let's say they're just primarily just like one brand of like products, right? How will that be look like in the world of Web3?
I have no idea. I don't know if it's relevant. Like, I don't, like, to Mark's point earlier, not everything needs to have like a token network. Ordering your smoothies online and your frozen foods might be perfectly fine the way it is. In fact, my guess is their evolution won't be in Web3, it will be in more efficient logistics and manufacturing, product innovation, and expansion of your product lines and things like that.
Totally. So, okay. So going back to Stepn, how do you guys find this deal? And then when you guys first meet the founder, the team, like was something that you find like impressive, or like, how do you see the economic upside? Let's say like if everything goes right, like what can this do?
Stepn is a team based in Australia. And so it's a team sitting in New York and LA. How did we find a team in Australia? Actually, it was through a very close relationship we have with a fund called Six Man, who told us about it last summer. And they said, "Oh, we've seen this interesting thing. We've put a lot of money into it. Maybe you should talk to them." And we thought that it was just a very cool idea. And then we spent time with the team. And the thing we liked about the two co-founders, Jerry and Jan, was that they had a really nice complement of skills. So Jerry was a tremendous product guy, had a really, really strong like gaming chops, and Jan was a really, really strong crypto native thinker, and had really strong views on how to grow a crypto network and get distribution and liquidity from the token. And so honestly, that was really it. And the thing about this market is that the rounds are typically smaller at the early side, I would say, and typically more syndicated. And so it's very unique as part of the venture capital landscape, because the idea of like leading, or quote unquote leading around, and taking a board seat, all these things that are very traditional venture capital ideas, kind of get thrown out the window. And the way these rounds get done are much more, the terms are almost oftentimes set by the team. Obviously they get negotiated, but they get set by the team, and then you move forward from there. So that was the idea. No one knew that the network would take off the way it did. But it's one where we kind of just followed our curiosity, and I think it's important in this market to do that, and then to also make sure to your question on the various L1s and how we come to some decisions, it's important to have multiple investments in this market. It's very, very tough to really know exactly where it's going to go.
Totally. You mentioned that you guys heard about this from another venture fund, and then you guys already, for other deals, like I saw that you guys collaborated with many great like venture capital firms. I guess like some of them are like just like crypto native funds. I'm curious, like how, in terms of like the investing in Web3 or crypto, is there any particular like fund that you really enjoy working with, or like you feel like is invested in like some really good companies? And like also like for like both of you, who do you consider as your like personal board of advisors in the industry, since, venture is still like pretty much like, a lot of them are like based on mentorship, as well as like, especially in Web3, I feel like it's still, especially super new in the industry in general. How do you kind of like
Yeah,
find the
so I would say, and because of your point, that it's very new. It's not like there's mentors who've been around this crypto market for decades, but there are people that have been around. It's like dog years in crypto. If you've been in crypto for 5 years, I mean, that's like, or 10 years even, you've been around for like centuries. And so we've invested, I mentioned Sixpan, we're big fans of what they've done. I can insert there. Placeholder is a fund we've co-invested with that we have a tremendous amount of respect for. We've invested with Dragonfly. We think they're really, really strong. And the list goes on, Multicoin. There's many firms that we co-invested with and that we admire, I think do really good work. Those same firms are probably, well, if you were to say we had mentors in the market, those are the same firms, because it's really still very, very new. It's very emerging. We've done about 20 deals now as a firm, and we've co-invested with many of the firms I just mentioned, and we're continuing to really active in the market and build credibility. I think one thing is probably clear to people that know us is that we're not tourists. We've been doing this for some time now, and we will continue to be very active as the market probably stays sideways for the next, I don't know, no one knows, 12, 18, 24 months. And we look forward to that.
Totally. Since the economic right now, it's like we're not like in the bull market anymore. So I'm just curious, like you mentioned that in the next few months, you guys will still be like very actively looking at investing. What are something that you would look differently compared to when you are in like a more active market?
I don't think thematically it's changed a ton. We are focused on consumer infrastructure, like how do you build the better infrastructure to onboard more users in the market. We're interested in different unique NFT form factors, and we're interested in applications building really novel token designs in interesting sort of areas of focus, like Stepn. So those are still our areas of interest. I think the market has slowed down a bit, which is great, because it's all a chance to catch our breath and be more diligent, which I think is a needed thing. And then also structurally, we're very much focused on making sure that when we do investments, we have exposure to equities and to tokens, because the market right now is very much in flux and it's got a lot of development ahead of it. And so we want to make sure as investors, there's that economic leakage, value leakage, and the company's got a really interesting token. We want exposure to that. But if they're also generating profits as a shareholder, we should have exposure to those cash flows. And if you only are owning a token, and vice versa, you only get exposure to one side of that. So there's an arbitrage right now between equities and tokens. I think long term that arbitrage will go away. But in the meantime, we're very much focused on making sure that we're well-rounded in our exposure to these networks.
And to add on that, I would say that our conviction in the space still remains strong, right? All the crypto asset prices are down 70, 80, 90% from their all-time highs, but so are all the main software stocks on the NASDAQ, right? And so big part of the crypto market's down significantly, right? But it's at an all-time high correlation with the equity markets. And so a lot of the pain that you're seeing, that leads me to believe that a lot of the pain that you're seeing in crypto is because just of the broader world, not specific to any reason endemic to crypto. So that gives us reassurance that the market's doing well, and we're starting to see more and more real world use cases with actual utility, and we're continuing to see interesting data and traction pop up along the way, which is a good signal.
I'm curious, like, how do you guys do due diligence to make sure the founders is like capable of like doing what they claim they'll do? Like, I guess like in general, how do you do due diligence over like, these like crypto related deals?
It's pretty similar to how you do diligence in traditional venture and looking at Web2 businesses. Obviously, I've alluded to this earlier, but things that are pre-launched, there's less diligence to do, but you're still looking at why does this product need to exist? What's the use case for it? What is the market? Does the market exist? Is it growing, right? If there's traction, what are the boring same KPIs that people have looked at for decades? Do those still apply here? And then, you can due diligence on the team, right? Same thing as when we were looking at a traditional Web2 investment. We, want to spend time with them. It can be a little bit difficult, more so difficult in crypto because the world is global and you're not always down the street from someone. But I think in many ways the same principles apply.
I'm curious, like in terms of like educating yourself in about this market, since like things are changing so quickly, do you focus on the technical aspect or do you primarily focus on what does this means for us like economically? How do you formulate like informational diet every day to keep yourself informed?
It's pretty hard to keep up with what's happening. I mean, the market is the amount of information, VC generally, and then Web3 specifically, you can spend all day just reading newsletters and emails, and I do try to spend a good amount of time making sure I'm up to speed, but it is moving really, really fast. And so there's a couple newsletters in particular I read on a weekly basis. What's Maria's called?
Crypto Weekly?
Crypto Weekly. Maria Bajwa
Sunday afternoon,
has a great one, and I read that religiously because it's once a week and it's deep and it's long and there's great links in it. So everyone's got their own sort of method, but I think it's imperative that you keep up to speed, not only on what's happening with startups, but with the VCs and what's happening in the regulatory environment. It's pretty important that you do your best to keep up. And if you miss some stuff, that's okay. There'll be a next cycle of news next week. But ultimately, I think our job day to day is making sure that we are in the conversation with really interesting founders. Mark and I are actually both based in New York. We're sitting with you here in LA, but we're both based in New York. And the amount of activity, even just in Manhattan and Brooklyn, is really tremendous these days. So just making sure you're out there and talking to people. And our biggest job is just talking to founders and making sure we're not missing the next big thing in terms of a trend or a company. That's kind of where we spend a lot of time, just being paranoid about.
Totally. Okay, so we're at the last session of our interview. I have a little fire round for you. So what's your favorite book? Both.
Love and the Time of Cholera by Gabriel Garcia Marquez. That's not a crypto book, obviously.
Yeah.
Or a business book, but it is a great fictional book that has lasted test of time in terms of reading it. I first read it as a teenager, and I still go back to it. It's a great book of the human condition.
I was going to say 100 Years of Solitude, but you already took that author, so that's off the table. Favorite book? I'd say my favorite crypto book is Crypto Assets by Chris Berninsky. That is the single best evergreen piece of literature I've read on how to educate yourself in crypto.
Who made the biggest impact in your career?
I'll say Carter Cordy for giving me a shot to work here. Yeah.
Richard Branson.
Who would you invite to your dinner party?
I would invite Muhammad Ali to my dinner party because he's a transcendent generational figure who, he was bigger than sports. He was bigger than culture. He was very, very impactful in this country. So I would invite Muhammad Ali.
Ooh, these are tough. I can't think of it. I don't know.
Come on, Mark. Okay.
It's just a dinner party, really.
So many. Kelly Slater, because I love surfing and it'd be fun to hang out with him.
Which city do you guys think will win Web3?
I don't know if it works like that in crypto.
New York City. It feels, I'm not saying that because I live there. It's because it feels, as someone who's been in New York for 20 years, it feels like it's never been more vibrant. And anecdotally, that's what many other people tell us. What do you think is going to win?
Oh, I will pick the Bay Area just because I live there. So yeah, I mean, I will be honest here.
I'm being honest too, to be honest.
Okay, so where can we find you outside of work?
You can find me at a show in New York City, maybe with Mark. Actually, we have similar music tastes, despite being considerably older. He's an old soul.
What do you guys listen to?
Weird stuff.
Yeah, some Nick Cave and the Bad Seeds. If you're into a little bit of a darker rock and roll, hear some minimal electronic music out of Berlin. venue in Brooklyn. You know, just depends, but certainly not stuff you're listening to on the top of the radio.
Awesome. We'll try to insert this song here as our outro. Thank you both so much for coming on the show today.
Thank you.
Thank you.